There is a specific feeling every trader recognizes. You open the chart, and the move has already happened. Price is far from where it started. The candles are big, momentum is obvious, and suddenly a quiet panic appears. You feel late. Not late in general, late right now. It feels like everyone else saw this before you, like the opportunity is slipping away, and the longer you stare at the chart, the stronger the urge becomes. You don't want to miss it again. This is not analysis, this is emotion, because nothing about the setup has changed, only your position relative to it. Earlier, the trade felt risky. Now, it feels safe. Earlier, waiting felt reasonable. Now, waiting feels dangerous. And this is the moment where most mistakes begin. Not because traders don't understand risk, but because the fear of missing out starts to feel worse than the risk of being wrong. This feeling doesn't shout. It whispers, just get in. Just a small position. You can manage it later. And that whisper is powerful, because it doesn't feel like greed. It feels like responsibility. You start comparing yourself to the chart, not to your plan, not to your rules, only to the move. And the move doesn't care about your timing. It doesn't care that you waited. It doesn't care that you were cautious. All it shows is what already happened. And the more you look at it, the more uncomfortable the distance feels. Distance between where price is and where you wish you were. This is when patience turns into pressure, and pressure is where FOMO is born. Most people misunderstand what FOMO really is. They think it's greed. They think it's impatience. They think it's the desire to get rich fast. But FOMO is something more subtle. It's not the fear of missing money. It's the fear of missing participation. You don't want to be left out. You don't want to be the only one not involved. When price moves fast, your brain starts searching for meaning. If it's moving, there must be a reason. If there's a reason, it must continue. And suddenly, the move feels justified. This is how FOMO disguises itself as logic. You're not chasing the move. You're confirming it. You're not breaking discipline. You're adjusting to new information. But nothing new has actually appeared. Only movement. FOMO works by reframing risk. Earlier, entering felt dangerous. Now, not entering feels dangerous. And when the emotional risk feels bigger than the financial risk, discipline starts to crack. This is why FOMO is so powerful. It doesn't feel reckless. It feels responsible. It tells you that waiting is lazy. That caution is weakness. That hesitation equals failure. And once that idea takes hold, the trade feels inevitable. This is why FOMO feels so convincing in the moment, because it doesn't tell you to take a reckless risk. It tells you to take a reasonable one. It frames the decision as common sense, as awareness, as being alert instead of passive. You start believing that discipline means reacting fast, that patience means missing out, and slowly the rules you trusted begin to feel outdated, not because they are wrong, but because the environment feels urgent. FOMO thrives in urgency. It doesn't need certainty. It only needs movement. And once movement becomes the justification, discipline no longer has a voice. It gets replaced by momentum. Late entries don't feel risky. They feel safe. By the time most traders enter, price has already moved. There is momentum. There is confirmation. There is proof that something is happening. And proof feels comforting. When you enter early, you're alone with uncertainty. Nothing has happened yet. The setup is quiet. The risk is visible. But when you enter late, the uncertainty feels gone. Price already moved in your direction. Other traders are clearly involved. The chart looks convincing. This is why late entries feel safer than early ones. Not because they are safer, but because they look safer. Movement creates the illusion of reduced risk. Earlier, the risk was obvious. Now, the risk feels hidden. You don't see what you're risking. You only see what you're missing. And the mind prefers missing nothing over risking something. This is how FOMO flips perception. It turns distance into danger, and patience into hesitation. The farther price moves without you, the more urgent the entry feels. At that point, You're no longer asking whether the trade makes sense. You're asking whether you can afford to stay out. And once the question changes, the decision is already compromised, because safety is no longer defined by risk. It's defined by participation, and participation is the most expensive illusion in trading. This illusion becomes stronger the longer you wait. The more candles appear without you, the more uncomfortable the distance feels. You start measuring risk incorrectly, not by how much you can lose, but by how much you've already missed. And missed profit feels personal. It feels like a mistake that needs correction. So the entry stops being about logic and becomes about relief. Relief from the pressure of watching. Relief from the feeling of being late. At that point, entering doesn't feel like a decision. It feels like an escape. And that's why late entries are dangerous. Not because they are emotional, but because they feel calm. They don't feel rushed. They feel justified. And when a trade feels justified, discipline is usually already gone. FOMO doesn't break discipline all at once. It breaks it in steps. The first step is urgency. You feel like time is running out, like the opportunity is closing, like waiting is the real risk. So you rush the decision, not aggressively, quietly. You stop checking conditions. You stop questioning the entry. You tell yourself there will be time to manage it later. This is where discipline starts to bend. The second step is justification. You don't say you're chasing the move. You say you're adapting. You don't say the setup is late. You say it's confirmed. Language changes before behavior does. And once the language changes, rules become flexible. Stops move slightly. Position size feels adjustable. Risk feels negotiable. Not because you planned it, but because you want relief. The third step is attachment. Now you care about the trade more than the process. You watch every candle. Every pullback feels threatening. Every pause feels dangerous. At this point, discipline is no longer active. It has been replaced by reaction. You are no longer executing a system. You are responding to emotion. And emotion does not protect capital. This is how FOMO breaks discipline, not with chaos, but with logic that feels urgent. What makes this dangerous is how controlled it feels. You are not panicking. You are not acting randomly. You feel focused. But focus without discipline is just emotion with direction. You start managing the trade emotionally, not mechanically. You tell yourself you'll exit if it turns. You'll reduce risk if needed. You'll adjust if something changes. But those decisions were supposed to be made before the trade. Now they are being made inside the pressure, and pressure changes judgment. This is why FOMO doesn't look like chaos. It looks like confidence. Confidence without rules. And that is exactly how discipline disappears without you noticing it. Chasing moves always feels temporary. You tell yourself it's just this one time, just this situation. You believe you're fixing a mistake, not creating a new one. But the cost of chasing moves is rarely immediate. At first, nothing bad happens. The trade might even work, and that's the most dangerous outcome, because now the behavior is rewarded. Your brain doesn't register the risk. It registers the relief. Relief from being late. Relief from watching price move without you. This is how a habit forms, not through failure, but through survival. Each time you chase and survive, the next chase feels easier. Stops feel optional. Entries feel flexible. Risk feels adjustable. And slowly, the entire process shifts. You stop waiting for setups. You start reacting to movement. You stop planning trades. You start responding to charts. This is the real cost. Not the money lost on one trade, but the discipline lost across many. Because once chasing becomes acceptable, patience feels unnecessary. And without patience, every move feels like an opportunity. That's how accounts slowly bleed. Not in explosions, but in quiet repetitions that feel justified at the time. And that is exactly how discipline disappears without you noticing it. What makes this pattern expensive is that it feels productive. You feel active, involved, engaged with the market. But activity is not the same as progress. Chasing gives the illusion that you are doing something right. In reality, you are just responding to movement, responding to pressure, responding to discomfort. And every time you respond instead of wait, you reinforce the habit. Waiting starts to feel passive. Planning starts to feel slow. Over time, this changes how you see opportunity. You stop asking, "Is this my trade?" and start asking, "Can I afford to miss this?" That question never leads to disciplined decisions. Professional traders experience the same urges. They see the same charts. They feel the same pressure. They notice the same moves. The difference is not awareness, it's response. Professionals don't ask whether a move looks strong. They ask whether it fits their rules. If the entry is gone, they let it go. No adjustment, no negotiation, no late justification. Because professionals don't trade excitement. They trade conditions. This is why missed trades don't bother them. A missed trade is not a loss. It's a confirmation that discipline still exists. They measure success before the trade, not after it. Did the setup appear? Did the conditions align? Was the risk acceptable? If the answer is no, there is no trade, and that decision is final. Professionals also reduce exposure when conditions feel emotional. They step back when urgency appears, not because the market is dangerous, but because urgency is. They understand that patience is not passive, it is active risk control. This is what replaces FOMO, not confidence, not prediction, structure. And structure is what allows them to survive long enough for probability to work. This is why professionals look boring from the outside. They don't chase movement. They don't react to noise. They don't feel the need to participate. They are comfortable doing nothing while others feel restless. Because doing nothing is still a decision. It's a decision to protect capital, a decision to wait for clarity, a decision to stay aligned with rules. Professionals understand that opportunities are not rare, but discipline is. And every time they ignore urgency, they reinforce that discipline. Over time, this creates confidence. Not confidence in prediction, but confidence in restraint. And restraint is what keeps them consistent when others slowly lose control. Tick zero is the moment before you act, before the entry, before the emotion, before the pressure. It's the moment where the chart is already moving, but you haven't moved yet. At tick zero, the urge is clear, the temptation is loud, and the excuse is ready. You can feel the pull to participate, to not be left behind, to finally get involved. But this is the last moment where you still have full control. Once you enter, you no longer control how you feel. You only manage the consequences of a decision already made. This is why tick zero matters most during moments of FOMO. Because FOMO does not ask whether the trade is good. It asks whether you can tolerate watching it continue without you. At tick zero, professionals pause. They don't look for confirmation. They look for alignment. Does this trade fit the plan? Does it respect the rules? Does it exist without urgency? If the answer is no, they walk away. Not because the move is wrong, but because the timing is. Tick zero is not about catching every move. It's about choosing which moves you are willing to miss. And that choice is what protects discipline when everything else feels urgent. This moment is uncomfortable because it forces you to choose discipline over relief. It asks you to stay still while everything in you wants to act. That pause is tick zero, and every time you respect it, you make the next decision a little easier.